Hey, long time no see, guys. This is Jonathan Hoover, and I'm back. So, let's just dive right in. So, it's been about a month, maybe month and a half since I was able to post a video, and boy, oh boy, has so much happened since then. I wanted to post, but I've just been way too busy with work. And let us just zoom in here. Just take a gander. Oh, this is T. Let's look at SPY. So yeah, since I made my last video, I believe that was towards the middle of February. Let's see. Here we go. It was right before this whole sell-off started. Check this out. We've gone from a high of 337 all the way down. Actually, I think that was 339. Yep, 339 to today. It's trading at 243. Yes, that's where it closed at. So that is a huge drop. 35% was the bottom right here. And who knows where it's gonna go. It's been all over the place. We've got this bounce here, down, could bounce back up and continue down, of course. But the market has not been this low since, let's see. Let's zoom out. Wow, it didn't even get this low back in the crash of 2018. So I traded through this crash. This is 20% down in a month, and then 20% up in like a little over 2 months. It was ridiculous. I was really angry about this, actually. Anyway, so I traded through that just fine. Did perfectly fine. And then we've got this big rise. So let's scroll. So in order to get this low, wow, still not. Let's see what 233, I think. Yeah, 233. Let's see. Where is it trading at 233? Here we go. Market trading for 233 back in 2017, boys. That's 3 years ago. So 233. Yep. Market made all-time highs back in February 14th of 2017. Yep, it closed at 233.71. So the market's literally just wiped out 3 years of growth. And so let's think about that. It's basically pricing in the equivalent of a 3-year recession with this drop. That's the equivalent of a 3-year recession. Why? Because the market has no idea how to deal with coronavirus. No one knows how to respond. Not just the market, the government. Just no one knows how to deal with coronavirus. And so we're all still figuring out, hey, what's going to happen? Our business is going to be closed. So we've got this massive sell-off. And let me look at the volatility. VIX. This is volatility. It's been down in the dumps for a long time. It spiked up a little bit in 2018, 2019. And the last real big spike in volatility we had was December. Oh, this is actually February 2018. So, yep, right there. And we've got a spike right here as well. So, here we've got volatility off the chart. It hit 85. And then look at this. It's just starting to collapse. This volatility is how I make money selling options. So we sell options when volatility goes up, and then it craters just as fast as it went up. Now the market's not going to recover as quickly as volatility wipes out, or I hope it doesn't, but that'd be crazy if it did. But with how much movement we're seeing in the SPY, it would not surprise me if the market did just explode up. So today, just so you guys can compare. So Yahoo News stated, Yahoo.com News, Dow up 2,000 Yahoo. Let's pull up this. Yeah, so this is crazy. Stock market news. Dow skyrockets to best day since 1933. That is insane to me, okay? That is just insane. All right, guys? So the market is very, very, very volatile right now. So you need to be careful trading, of course. Now, with the fact that we've dropped so far, I don't expect to have a ton of more heavy downside selling. The market's pretty well priced in my opinion, because companies have grown values and companies are just bigger than they used to be and stuff. Anyways, so yeah, a lot of businesses are going to be hurt and we may enter a recession, but I think most of that's been priced in by this market down move. That is just what I think. I don't know anything, alright? So don't take my advice. Don't consider this investing advice, please. Now, my expectation, the way I'm expecting this market to move, I think it's going to start trending sideways to down, or it's going to rocket straight back up. That's my expectation for the markets, okay? As such, I am positioning my portfolio to take advantage of that, specifically by trading these jade lizards, okay? And the jade lizard, the way it sets up, I make money as long as the stock stays above 187, and I don't even have to worry about this position. This is in the money because the market moved up so fast today. It completely went in the money. But that's exactly why I put this position on, to capitalize on volatility crush. So you saw that volatility decreasing in the VIX. Well, this trade takes advantage of that and allows me to capitalize on that while having no upside risk at all. There's zero upside risk to me. This is the green here, this is all profit to me. That's all profit. All the way until it turns red right here. So 187, that's where I start losing money. The market to hit 187 is going to have to lose 50%. That is how expensive the options we're selling for. And so I'm pretty well set up for that at this point. Now, if you take a look at my IRA balance, when I started filming this, we were pushing 7,000, and this market has cut my IRA balance in half. A lot of that is just because of how inefficient trading in an IRA is. Look at that, the commissions. I've racked up $654 in commissions and $185 in fees. So combined, that's $750, $830 something, just shy of $840 actually. So $840 in commissions and fees. That's $800 I'm not seeing here. And then on top of that, I've got this $1,375 loss. $3,460 in realized profits, but the unrealized profits way outweigh my profits, so hence the loss. Now, if the market keeps rallying, some of these positions will come back a little bit, but I'm probably not going to be able to make any of it back. Just to show you how badly my positions are doing here. Let's see. So here's SPY. I have to scroll all the way, so that's at 243. You don't even see my positions until we get to 280. In order to like break even on these, it's gonna have to trade 280 in the next 52 days, and I'm closing this. I've got another trade almost as bad. Oh, actually no, this was a Jade Lizard. So the 180, 185, that's a $5 wide, and the 242, 243. This trade will actually make me money. That's good. Both of these trades are losing me money right now. So, but the losses are capped because it's an IRA, and so whatever. So what I've been doing to take advantage of all of this beautiful volatility. So this is Delta Airlines. Jade Lizard play here, obviously not working out. So entered that one a little bit too early, but you know, you win some, you lose some. It's okay. I'll make the money back slowly over time. So what I've been doing to capitalize on this is putting in trades on, so doing calendar trades on stocks that I feel like are severely undervalued right now. One of them is Oneok Energy. This is a very illiquid stock. So if you look at this, the bid is 0, which is ridiculous, and the ask is 420. And the reason is because I am the only idiot with a call here. There's one contract of open interest, and that is yours truly. And so, yeah, if any of y'all want to jump in on Oneok and buy or sell some calls, I'd love the liquidity. But, no, it's alright. So, Oneok is a company I think is very undervalued, so I sold a call with 38 days to go, and I bought this call, the 30 call, for yeah, so this is a little bit more liquid. There's 391 people who have this one, and yet the 32 call has only a single option. That's ridiculous. Anyway, so me and a whole bunch of other people are speculating that this Oneok stock will trade above 30 by January 21st, 2022. The reason is because this company should be fairly valued between $80 and $60, and it's trading for less than $30 right now, which is ridiculous to me. Oneok follows gas prices pretty closely, like oil prices, and oil did fall apart. However, Oneok Energy specializes in natural gas, which, granted, the prices did fall for that too. However, natural gas is never going to be worth 0. On top of that, Oneok Energy has they're an oil pipeline. They don't make money off of the price of gas. They make money based off of the volume of gas that they're transacting. So they should be perfectly fine. I'm not worried at all. They might cut their dividend because their dividend is ridiculously high right now because of how far their price fell. But I don't think Oneok is going to be in trouble. Honestly, like, that's my opinion. Anyways, so yeah, so I feel like this is a fantastic buy, and that's why I bought that option. And to make an amazing deal even better, I only spent, if you go up here, $275, $275 to initiate this position. So last time, I've made money with Oneok before, and I spent probably $1,500, and I made like $3,000. Like, I sold it, made another $1,500. I basically doubled my money. I bought it for $1,500 and sold the whole thing for $3,000-ish. So yeah, made a bunch of money. It was fantastic. I loved it. It was great. I held it for several years. This is an opportunity, like, especially if when the market stabilizes, I personally feel like Oneok stock is going to rise really quickly as investors realize how undervalued it is. So what my game plan is simply to roll as soon as this becomes liquid. I'm going to be rolling this call up from like the 32. I'll roll it up to the 33 out in time though. So like I'll sell yeah, I'll probably sell the 32.5 or something, or maybe the 35. And as soon as I can do that for a credit, I'm going to do that because that will lower my investment. So I sold it for, I rolled it once already for 25 credit. So really I'm in this for 250 bucks at the moment. So, yep. And yeah, if we go to my overall total profits, I'm actually down about 80 bucks on the trade at the moment. But the only reason I'm down on it is simply because of how illiquid this stock is. So it's not going to be a fun trade, but I couldn't resist. Also, I'm doing the same thing in Delta Airlines. This is amazing. So the same trade, $565 to buy this call, the 35 call, and sell a 35 call against it. And if you check this out, I'm already up $104 on that trade. I might actually close that trade. I wasn't planning to close it, but if it keeps climbing like this, we'll see. So if it keeps climbing like this, I might, because I'm gonna need to roll this call this weekend. So what is that? What was that? 35? See, they don't even have the 35 calls displayed here, so I can't even roll it. So I'm not gonna be rolling it. Anyway, not until they got 35 calls that I can trade. So that is dumb. This is really dumb. Anyways, eventually I'll be rolling that though. So this stock is much more liquid than Oniok. Now, what I really wanted to draw your guys' attention to is an interesting experiment I've performed. So you can see my positions are up. This is all just the volatility collapsing. And in addition, it's my losing positions simply regaining some of the money that was lost. So it's not, I mean, it's nice to see, but it's just making up lost ground. But what I'm really interested in is I actually ran a little experiment. So I bought 100 shares of, here we go. Yeah, so I bought 100 shares of at&t, which is a pretty liquid stock. And I did that on February 26th. And I simultaneously sold Strangle. And I wanted to compare what happens to the P&L if I were to buy the stock in one account and then sell a Strangle in the other account. Let's compare the returns, okay? So the returns, we'll just take a look, see. So this at&t stock, since I purchased it, is down $934, and it took $3,743 in cash to purchase this stock. If we were using a margin account, it would be probably what? 37. So it's gonna be about $1,870 something dollars. So yeah. So 1,800 bucks. All right. To place this trade on. I wouldn't recommend trading with margin with stocks because margin works differently with stocks, but minimum you'd have to put up is 1,800. We're gonna say 3,700 because I don't believe in margin trading with stocks. We're down 934 bucks. That's a 25% loss, okay, on your money. That sucks. Now, let's pop back in here. Let's look at T. All right, so my position says I'm down $904. And you're like, well, that's pretty much the same. Yeah, I mean, that is the same. Basically, this put right here, if we scroll over here, the delta is 79.89, which is actually less than I was expecting. But that just means it's about the equivalent of holding 80 shares of stock. So yeah, that's down $825, and it's at the 37 put. 80 shares. That's almost the equivalent as if I was holding like that. So that in itself is pretty interesting. We've got, I'm actually surprised that theta is so high. But yeah, there's actually still quite a bit of extrinsic value too. Now let's pop into look at at&t. Look at my position. Now normally when I sell a strangle, I'm going to be selling the 20 or 30 deltas. So yeah, so normally when I sell a strangle, I'd sell something like that. But my positions are wildly opposite, like completely inverted. And the reason is just because they were like that originally. I think I sold, so I sold this 37, and I probably sold like the 44 or something. So I sold those stocks originally, or those options originally. And then as at&t continued to drop in price, I just kept rolling this call down and down and down, down and down and down and down until we got to here. Now, every single time I rolled that call down, I've collected a credit. So this is my initial credit. I sold the 36 and the 39 call. Oh, interesting. 36 put, 39 call. So that initial credit is 109 plus 0.21 plus $1 plus 40 cents plus $1.31 plus 56 cents plus 88 cents plus 48 cents plus 21 cents. I think I got all of them. Yeah, so I collected a total of $6.14 per share. So that's $614. And that's all the credits that I've collected on this trade so far. Now, every time I rolled this, I was locking in the profits that I've made on these calls. So now if we go into my actual P&L on at&t, I've got $355 of locked in profits right there. So my actual positional loss since initiating this trade on February 26th is only $549. Let's compare that again. $549 compared to $934. On top of that, I'm using, in order to hold this trade, I am using my initial entry, so at&t. In order to place the trade, it cost me $561 in buying power. I'm not spending that money. That is simply collateral, which I hold against the trade. So $561 versus $3,700. And in the process, I lost about 40% less. So 40% less than if I were holding the shares. Now, of course, my initial requirement, I have to hold $1,725 in my account in cash in order to offset, like, guarantee the position, the puts, because they are so far in the money now. So that initial requirement has expanded as the positions become more and more in the money. That is why you need to have a lot of excess cash on the side. That's why when you look at my trading account, I'm only using half of it to trade, because the other half is just there in case things like this happen. Anyways, so that is why I trade options and don't trade stocks, because it's just so much more efficient. I'm using a fraction of the amount of money in order to generate better returns, even in the worst. So AT&T has done nothing but go down. It's the trade I put on, by all rights, should be a complete loser. But because I know how to manage my position, to reduce my exposure, my directional risk, right now my directional risk in this trade is, so I've got 79 versus 57, so that's 22 deltas of directional risk. So I need AT&T to go up a little bit. And then pretty soon it'll be completely neutralized. I'll have no directional risk exposure in that position. So AT&T was up $1.30. If it goes up another like $2 probably, that would completely neutralize those deltas in there. So anyways, but yeah, so because I know how to manage my positions, options pose less risk than simply buying and holding shares. And the amazing thing is I can close these positions on. I am going to actually keep this trade on. We're just going to keep running this experiment and see how long it takes me to get back to even with AT&T, alright? So at 21 days, so this Friday, I'm going to try to close this trade and open up a new one in May. So yeah, so we'll open up a new one in AT&T, try and make our money back. We're just going to be rolling this out. Now I'm not sure if I'm going to just eat the loss and open up a new trade. Maybe I'll do something, I don't know. Yeah, I'm not really sure how I'm going to open up the trade or structure it yet. I've been playing around with that. It's very wide markets here, so we'll see. But anyway, I'd be happy if you guys just followed along with my trading journey. Thank you very much for watching.